Welcome to the next session in our New Cycle Trading and Analytics Aurora Trading System Education curriculum. We're excited to be here. In session 1 of the entire Aurora Trading System training program, you learned about the PB3 signal. Session 2, you learned about the PB35. Session 3, we taught you how to recognize trends with the PB13. Session 4, we discussed different ways to effectively manage your risk as well as the opportunity. And in session 5, we talked about PATS, which is the method for managing your day and managing not giving back profits that you've accumulated so that you can actually achieve your goal for the day, whatever your personal trading plan goal is. And this is session 6. Session 6, we're going to be talking about the signals 3A and 4A. We're evolving in our understanding now of the Aurora system, meaning you've gone through each of the first 5 sessions, and you're evolving now into a state of trading the system versus trading the signals. The Aurora trading system is a very robust trading system. The Aurora trading system offers multiple opportunities in terms of combinations of timeframes as well as indicators to identify the best, strongest opportunities to get into a trade and work towards achieving your personal profit goal. Each of you should be using a personal trading plan, or at a minimum have some idea of what you desire to accomplish on a daily basis. So in this session 6, we're going to be talking a lot about trading the system versus trading the signals. The difference there is you could take each and every signal that the system presents, but there are ways to look at combinations of those signals and combinations of timeframes to decipher which of those signals may be a higher or lower risk and which of those may have the best opportunity to succeed. So the Aurora trading system, as I mentioned, is all about combining timeframes and indicators to identify optimum profit opportunity. And that's really what we're looking for. We're not looking for maximum profit opportunity, although you may choose to do that in your own personal trading. We are looking for a way to identify signals combined with timeframes and indicators to trade for optimum profit. And I'm going to talk about what I define as optimum profit here in just a moment. Each of you may have a slightly different definition of that. So the Aurora trading system considers signals, indicators, and timeframes as parts of an entire system. You really are trading a system now, remember? You're not trading individual signals. That's not your goal. Your goal is to understand the signals, understand the indicators, and trade the system. Trade with your daily goal in mind. See these numbers that I have here, 62.5 and 125. We are in our proprietary trading team now trading NQ, and we are trading oil, CL. 62.5 points on NQ and 125 ticks on oil represents an opportunity that we are pursuing here over the next several weeks. So 62.5 points, in my experience with the Aurora trading system, is a pretty easy goal to achieve. My experience with oil at 125 ticks also says that that's a fairly easy number to achieve. Again, using the entirety of the Aurora system, including the 3A and 4A signals, which I'm going to present to you here in session 6. So why 62.5 and why 125? Again, your numbers may be different, but let me tell you how that translates to the goal that we have here at New Cycle Trading and Analytics. 62.5 points on NQ and 125 ticks on oil, traded with 10 contracts, achieves a profit of $250,000 per month. If you traded 62.5 points on NQ and you traded 10 contracts, that translates into, over a 20 trading day month, that translates into $250,000 for the month. Same thing with 125 ticks on oil. Now, I'm not saying that you're going to go out and do that tomorrow. What I'm saying is that we've also provided a tool called the Personal Trading Plan that shows you how to scale your contracts. And as you grow your profits, and you increase the number of contracts, if you choose to, when you get up to 10 contracts trading at just these values, 62.5 or 125, that's a $250,000 run rate per market. Now, you might decide that that's not a goal that you want to work towards, that you're not comfortable trading 10 contracts. And that's fine. This is a very personal thing. I'm sharing with you what the goal is that we have for our trading within our proprietary trading team. You could trade 31.25 points on NQ with 10 contracts and have 125,000. You could trade 31.25 with 5 contracts. 31.25 with 5 contracts and have 62,000. So you can do the math any number of ways that you choose to. What I'm saying is that from a view of trading a system, the system includes timeframes, it includes indicators, it includes signals and all of the underlying algorithms that we've built into the system, but it also includes what is your goal for trading? What is it that you are looking to accomplish in your trading? Because if you don't have a goal for your trading, it doesn't really matter what you do, because you won't know whether or not you've met your goal. So you need to have a goal in your trading. And all I'm sharing with you in this particular moment is that a $250,000 income is a very achievable income following the system. This requires an investment of time. It requires a conscious commitment to learning a system, not being casual and not being lazy about it, or not having a loss and just saying, oh, I lose. You need to wipe all of that out of your thinking, and you need to commit yourself to learning the system. We are here to help you do just that. We've designed the system for you. We're using the system ourselves. We're building a proprietary trading team using the system, and we are available in the live trading room every day to help you learn how to also use the system. You could come up with the same type of monthly profit goal using options. What I'm presenting to you is just based on futures. It should not be viewed as something that is limited to those numbers or confined to just those numbers, or those are the numbers you have to use, or 10 contracts is what you have to use. This is entirely up to you to create your plan. So what I encourage you to do as I get into teaching here session 6 and the next set of indicators is to study the system, ask questions about the system, and use the signals so that you can participate in profit opportunities that I would suspect most of you have never been able to achieve, whether it's from other sources of income or through your own trading. We want every one of you to succeed, and I know that each of you has the ability and the opportunity in front of you to achieve these types of profits. In terms of trends, the biggest opportunity to earn your profits is seeking out the trends. No matter how frustrating a day is because it's choppy or something's going on that's just confining the market to a small range, whether it's an oil market or a NQ market or any other market that you may choose to trade. Historically, there are almost always 1 to 2 trends per day. And what we have continued to evolve and enhance with the Aurora system, Aurora trading system, is the best ways to identify those trends, as well as improving our guidance on how to stay in those trends. All right, so 3A and 4A are signals that have always existed within the Aurora trading system, but we have not taught them. When we rolled out the Aurora trading system, we initially rolled it with the 3 primary trading signals that we've been discussing here for the last 3 months in the live trading room. In the meantime, in the background, we've continued to evaluate, research, and track other forms of signals that are already existing within the system. When we first rolled out the Aurora trading system, we explained to you that it is a very robust system, it is very powerful, and it is not at all limited to just the 3 primary signals that we've been talking about. So we're now ready with data, with live trading, with research to release the 3A and 4A signals, which I think are a huge enhancement to the system. Combining timeframes and indicators to identify optimum profit opportunity. The 3A and 4A signals are going to identify natural interpretations of market chop and trends. So when we've been trading the 3A, PB3, PB35, and PB13, as we've been trading those, we are filtering out a lot of signals, especially most recently. And that's because there's been a heightened level of volatility in the market. We're seeing more extreme pulls away from the moving averages. We've been using Bollinger bands as a way to measure how far away from the moving averages we've pulled. And we've been filtering out those trades. Kristen, when she's calling out trades, is saying, you know, we're filtering this trade, we're not taking this trade. And what that means to us is that we are recording the performance of that trade for our own purposes, our own research, but in our own live trading, it's not a trade that we would take because we believe it has a heightened level of risk. The 3A and 4A signals help to clean up some of that. There's minimal filtering with the 3A and 4A signals. In fact, we don't really talk too much at all. There are a couple of unusual, highly unusual conditions which we may filter a 3A or 4A signal, but mostly there's not a lot of filtering because the design of the 3A and 4A signals is such that it naturally filters out the higher risk and provides for opportunity. One of my frustrations in the PB3, PB35 in particular is that we miss out on some post 50-point bars. Now, I think we make the right choice about eliminating trades, filtering out trades, following a 50-point bar on a 3-minute chart, but there are so many opportunities where following those 50-point bars, there's big 30, 40, 50-point trend opportunities. So we have seen with the 3A and 4A signal that they give us opportunities to sometimes, frequently, take those trades that allow us to participate in a post 50-point bar. And then we have we've refined the definition of staying in the trend, what the most effective way to do that is. Now, a lot of what you're going to hear about in terms of trends is similar to what you've already learned in sessions 1 through 5. So this isn't all entirely new. It is adding a couple of new signals that have always been present. You just didn't know they were present. And now it's time for you to learn those. And there will be some similarities to things that you've previously learned. So the definition of a 3A and 4A entry signal. A 3A is combining, I'm going to explain this first, and then I'm going to go to a chart and give you a visual, is combining PFO, which is the profit flow oscillator. Now, the profit flow oscillator has been part of our system since we originally created the adaptive entry system. So what we're looking for a 3A entry is the profit flow oscillator, CXA, and PBA to all be aligned, and the price bar color is white. It cannot be an opposite price bar color, and it won't be an aligned price bar color, because when the price bar color is aligned, that is what we refer to as a 4A. Now, we didn't get real creative on the naming of these signals. 3A is just simply, there are 3 parts of the system that are aligned. That's 3A, 3 alignment. And 4A is 4 parts of the system: PFO, CXA, PBA, and the price bar color. So we have 4 parts of the system that are aligned. Now, one of the differences of 3A, 4A versus at least 2 of the prior signals that you've learned is that this is all viewed on a single time frame. So PB35 requires a 3-minute and a 5-minute. PB13 requires a 3-minute and a 10-minute. And now when we look at a 3A or 4A, we are primarily looking at either a 5-minute or a 10-minute on NQ, or a 5-minute, 10-minute, and 15-minute on oil. Those are the primary timeframes where we are trading. But like with all Aurora signals, we have members of our community who are trading shorter time periods. We have members of our community that are trading longer time periods. So this is not to imply that these signals only work on 5-minute, 10-minute, or 5-minute, 10-minute, 15-minute. No, those are just the primary timeframes that we are trading within our proprietary trading team, and those are the primary timeframes that we have done our research on and analyzing what the result could be. These signals, the 3A, 4A, provide good profits as well as a practical number of trades. As our prop team has started to trade these signals, I've been doing a comparison of not only the performance results, but also the number of trades. I've been doing a comparison with Kristen and her tracking, and it's almost always a half to 2/3 of the number of trades, so fewer trades, and almost always better profit performance. So I like that combination right there: fewer trades, bigger profits. And again, I'm not in this trading game to get maximum every day. I don't consider my trading to be open-ended. There's a point in time where you're done for the day. And we've drawn a line in the sand for now with our prop team that is a 62.5-point goal for the day on NQ, and 125 ticks on oil. And those numbers will probably evolve and change as we continue to grow our prop team, but they get us to a really strong $250,000 profit on a monthly basis with 10 contracts. So when you encounter a 3A entry, it's an alignment between the PFO, the profit flow oscillator, the CXA, and the PBA. Now, you guys are all familiar with CXA and PBA. You've learned about those in the prior 5 sessions. When those three signals are aligned and the price bar color is white, you enter the trade at the open of the bar. That's nothing new. That's the same type of action that you've been taking on every other signal within the Aurora system. When the alignment occurs mid-bar, this again is similar to what you've previously learned, enter at the open of the next bar if all indicators signals are still aligned. The 4A is exactly the same. You just need to have the profit flow oscillator, CXA, PBA indicators are aligned, but the price bar color also needs to be aligned with the directional bias of the indicators. Enter at the open of the bar. If it's a mid-bar print, then you enter at the open of the next bar. Now, one additional piece of information that we're going to try to help provide some guidance to you on here as we're trading in the live trading room, the 3-second rule applies. However, on longer time frame charts, if I'm trading a 10-minute chart, or if I'm trading a 15-minute chart, or in some cases, if I want to go to a longer time frame chart, additional time may be appropriate. So for example, if I'm taking a trade off of a 15-minute chart and the signal comes on mid-bar, say 20 seconds into the bar, I'm going to look at how much has the price moved and make a decision whether or not I want to take that trade. But I think sometime in the first 30 seconds of the bar print, if it's a 15-minute chart or even a 10-minute chart, is reasonable. I think it sometime in the first 15 seconds, if I'm trading a 5-minute chart, is reasonable. But you have to be diligent about checking how much the price has moved. If I'm trading oil and I'm 20 seconds into the bar and the signal comes on and the price has already moved 30 ticks when my goal is 20 ticks, I'm probably not going to take that trade. If the price has moved 2 or 3 ticks or it's hovering around the open of the bar and it comes on 15, 20, or 30 seconds into the bar print, I'm probably going to take that trade. So it's a slightly different way of thinking about the original parameters that we taught you in terms of the 3-second rule. The 3-second rule still applies on 3-minute charts, but we're generally not focused on 3-minute charts with 3A and 4A signals. You can be. I've been watching those, and those work just as well as they do on any other time frame. All right, so let's take a look at some charts and give you a real good idea of what these signals look like. So this is NQ. I've got a 3-minute, 5-minute, 10-minute. You're used to seeing those. I'm going to open up the 5-minute here, and I'm just going to randomly identify for you some entries. Okay. So back here, this is at 10:25 this morning. At 10:25 this morning, we have alignment between the PFO. Let me do this here. So this is the profit flow oscillator, the NCTA profit flow oscillator. This is a indicator that we created here at New Cycle Trading. So I'm just going to unclutter that. So you have the PFO, you have CXA, and you have PFA all lined up short. Price bar is white. This is a 3A entry. 1, 2, 3. Price bar is not aligned, but it is not in conflict. That's a 3A entry. And you can see that we had some nice movement to the downside. A 4A entry would be if you have PFO, CXA, PBA, and price bar color alignment. So you might have a situation, I don't think it happened in this one. Let me just see here, 521. Oh yes, certainly it did. So you have a situation here where you have a 3A. 3A signal gets you into the trade. you could take 10 points of profit. We'll talk about stop and profit target parameters here in just a few moments. But you could take 10 points of profit on the 3A, and then you can get right back in on a 4A a couple bars later. So there's 10 points, 20 points of profit, all in a matter of 15 minutes. Here you have CXA and PFO, but you have no PBA, and you have a conflict on price bar color. So we're not going to take a trade like that. Here we have PBA, CXA, and price bar color, but we have no PFO. PFO with 3A and 4A signals is your driver. It's your primary qualifier. That's the indicator that you want to have aligned. Here we have a 3A, 1, 2, 3. Price bar color is not aligned. It is neutral. So there, if that happened at the open of the bar or within a reasonable time period after the open of the bar, you potentially have 10 points of profit there. And the next bar is your 4A entry. So there's a 3A entry, there's a 4A entry, both of those give you 10 points of profit. So the 3A, 4A is really a simple signal to recognize, to understand. Let's take a look at oil. And I'm going to look at a 10-minute chart on oil. 10-minute chart on oil, just kind of randomly going back here. Here we have a white price bar. We have a short PBA. We have short PFO, and we have short CXA. That's a 3A entry because we have 1, 2, 3 signals aligned, all in the one time frame, and we don't have a conflict in the price bar. It's white, it's neutral. The next bar gives us a 4A because now everything is lined up with the color of the price bar. As you start to understand this and you go through it and scan through your own charts or participate in the live trading room, you're going to start to see how powerful that is. You can even have a single bar. So let me say two things here. This is a good example on oil of a single bar here. You've got 1, 2, 3 alignments, all right? And that's a 3A. You end up with a nice profit on that, but then it all goes away on the next bar. What we are using 3A and 4A for is to try to identify trends. Just like PB13, but 3A, 4A is filtering out some of the noise that we can have on a PB13. And so we're looking for the trends. We're looking for strong trends, and that's what we've been identifying. We've been doing an extensive amount of research on these signals for the last few months. We were doing it even before we released the Aurora system. And we got to a point where I felt very comfortable with the consistency of the signals and their profit production that we taught our prop team these signals, and they've been now trading it and recording the detail just like Kristen does on the other 3 signals every day. I'm going to share that with you here in just a moment. So again, this is a 10-minute chart, and you can see the number of opportunities that there are. Here's one that does not have the PFO. Now you can see that that worked out, but the PFO, profit loss oscillator, comes on here. That's a 4A, and there's a really nice move to the downside on oil. Okay, in terms of profit and stop management, these are the guidelines that we are working with. The stop parameters that we are using is 30 points on NQ and 50 ticks on oil. Now, what we are working more towards as our data collection gives us tremendous confidence in our trading is I have a very simple philosophy. I do not want to be stopped out of trades. I want to use a stop, and it's necessary to use a stop when trading futures. It's necessary to have some sort of a fail-safe protection out there. But I am not interested in being stopped out of a trade where all of the indicators and the alignments of those signals is still telling me to hold the trade. I want to take the trade off when the signals go away. I'm going to have certain criteria that are telling me when the signal is no longer valid, and I'm going to use that criteria to take the trade off. Now, there's a practical limit to how much people are willing to risk, but for now, 30 points and 50 ticks. But if we get close to 30 points and everything on NQ is saying, no, you should still be holding this, long or short, I'm going to move that stop out of the way. I am not interested in having myself taken out at 30 and a half ticks, 30 and a half points on NQ, only to have it run. We actually had a trade yesterday on NQ that did just that to us. It took us out at 30 and a half points, and then it ran 116 points favorable. And yet there was absolutely nothing on the signals that suggested that we should take the trade off or even tighten up our stop. So the stop, you're going to hear me talk more and more about this in the live trading room, and each of you has to apply your own reasonable, practical application of what kind of a stop to use. But the stop for me is not something that is an exit strategy. The stop for me is purely protection. And so if my stop is at 60 points, if I'm willing to risk that much, it simply is a fail-safe stop in case all of a sudden there's some news that abruptly moves NQ like it can. But I want to make all of the decisions about when to get into the trade, and I want to make all the decisions about when to get out of the trade. Profit targets that we're using initially for what we call catch trades is 10 points on NQ and 20 ticks on oil. That's just what we've been trading previously. All right, so regarding trends, the big change with profit targets for trends is we don't really have a fixed profit target. We leave it open-ended. Now you can use whatever you want. On NQ, you could use 30, you could use 50. I actually have my dome set at 150 points just to have it out of the way so that I can make all decisions regarding when I want to adjust my stop, when I want to take the trade off, when I want to lock in profits. So my dome on NQ is just set at 600 ticks, 150 points, just to push it out of the way. And if I get taken out for that, I'll be fine with that, even if it moves another 50 or 100 points. But the PFO, the profit flow oscillator, is one of the strongest indicators of a continuing trend. So what we are trading for on the trends is holding for the PFO signal stop. So if the PFO is continuing to print, we want to continue to hold the trade. We are going to get some volatile movement. We're going to get some moves, possibly some impulse moves, some retracement moves. So then there's a practical side of, at some point, I might just lock in profits. But basically, the profit flow oscillator is the primary indicator that we're using to say, should we continue to hold, or should we adjust our stop, lock in profits, reduce our risk? Does it look like the whole pattern is continuing or is starting to weaken? We still will be using the method that we taught you about the prior bar. So it could be the prior 5-minute bar, it could be the prior 10-minute bar, whatever time frame you're trading. Or if you're trading a 10-minute chart, you could use the prior 5-minute bar as a way to lock in profit. Or if you see the profit flow oscillator signal disappear mid-bar, you could adjust your stop to the prior 10-minute or 5-minute bar in order to either reduce your risk or lock in profit. So that prior 5-minute bar methodology is still part of this, but the PFO is telling us whether or not we should take action in addition to that, or whether we should just continue to hold. Our initial adjustment in using the prior 5 or 10-minute bar is after NQ has moved 20 points, which is the same as what we've been doing on PB13 trades, or after oil CL has moved 20 ticks. So 20 points and 20 ticks is kind of our trigger that now we're getting into some momentum in terms of a trend. And so that's where we would look to pay attention to the PFO. If the PFO is still printing, but we can lock in profits or reduce our risk by using a prior bar 5-minute or prior 10-minute bar, then that's the method that we're going to use. One other thing, on both oil and NQ, we have impulse moves. And that in those cases, it's just arbitrarily locking in some profit. We had a trade today that had such a big impulse move right out of the gate this morning, such a big impulse move that we could lock in 50 points, even though it ran to, I think, 78 points. It was arbitrary, and it was arbitrary but solid because I know that our goal is 62.5 points, and I was able to just take 50 of that in a single trade. Even though it continued to move higher, I'm not going to let it come back and deprive me of that 50 points. So there are some impulse moves that you're still going to just arbitrarily lock in. So let's take a look at some of the performance that we've been experiencing. So this is just taking the daily summary for NQ on the 3A and 4A. So let me just make sure, yeah, I'm all the way over. Yeah, there we go. So I'm going to give you what each of these columns is defining for us, and you can see what the performance has been. Now, we don't have a tremendous amount of history that we're showing here because the 21st of March is when we began having our prop team trading this. But we didn't have our prop team start trading this until after we'd accumulated several months of data that, we were refining it, and we were refining our holding and the signals. And once we got to a point where we felt like we had that data pretty much defined, and the criteria defined, and the parameters defined, and the methodology defined, we gave it to our prop team, and they've been tracking the details just like Kristen does on PB3s, PB35s, and PB13s. So this category right here is trading a 5-minute NQ chart. Remember, you can look at just the 5-minute chart. You don't have to look at any other chart. Sometimes it might help you if you look at another chart, but you can just trade the 5-minute chart. And this is taking every 3A and every 4A signal and just holding for 10 points of profit. So you can see here what the profits have been. The average over that period of time is $558 a day. Okay, so 27 points a day. That's okay. I mean, that's a good start. And this is all 7 to 2, just like we've always talked about. This category is taking those same trades and holding for the PFO exit, trading 5-minute chart and holding for the PFO exit. And that would give us an average of $1,500 a day. And we're seeing a lot of that. So that's, again, conservative, I think, because PFO exits sometimes will give back some portion of the profits that you've accumulated, especially if it comes on mid-bar. So a lot of this here is the ability to manage your stop. So if a PFO goes blank mid-bar, did you adjust your stop then to the high of the prior 5-minute bar, or high or low of the prior 5-minute bar, and more effectively manage your risk? But overall, it's $1,500 a day. This category is just using a standard 10-point profit target, trading the 3A, 4A off of the 10-minute chart. That's actually the weakest category we have. I think what happens here is the moves are identified so much earlier on the 5-minute that it's a better opportunity, and the 10-minute ends up being a weaker category for us to just take 10 points of profit. And if you held on for the PFO exit, it's about 50 points, a little over 50 points, trading all the 10-minute 3A and 4A. And then we have the combination. If you traded the 5-minute and 10-minute looking for standard profits, it's 45 points, 45 points a day, $900 a day. And if you took each 5-minute and 10-minute 3A and 4A signals, where it means you might have some duplicate trades because you might be in a 5-minute and then a 10-minute comes on if you decide to do that, that's $2,600 a day. Now, that $2,600 a day average is not replacing the PB3, PB35, and PB13. It really is something that can be integrated into that trading. It can be traded in addition to that. Not all of it will be incremental, because you'll have, unless you're literally taking a contract for every single signal, which I wouldn't recommend. So there's some overlap of the signals, but the power of the 5-minute 3A and 4A is that we frequently have 3-minute 50-point bars that are depriving us of opportunity the way we define the parameters. And the 5-minute gives us that opportunity because we get more confirmation of that signal. So $2,600 a day. What do I really need per contract? I need $1,250 a day per contract on 10 contracts to get me to the goal that I have for my prop team, which is $250,000 in a month. So we're working towards that. So I wanted to give you a comparison here. What we did was Aaron was kind enough to just load in a comparison from what Kristen tracks on the 3 primary signals that we track, and you can just see here, what the daily comparisons are. There are a couple of unusual days where the PB35, PB3, PB35, and PB13 outperform the 3A and 4A, but that's pretty rare. And overall, you can see that the 3A and 4A is double what the other 3 signals are. The weekly average that we have so far, you can see what that is: 16,000, 10,000, 10,000. We're at 10,000 this week with one more day to go, versus 78, 59, and 45. Now, the thing I love about this as a system is I think most anybody would be delighted averaging $1,300 a day. I think most anybody would be delighted with $1,300 a day. And what we're sharing with you here is there's an opportunity to add an incremental $2,600 a day probably not entirely incremental because of the duplicates, but we're just making the system much more robust for you. And those of you who would prefer not to look at different time frame alignments, well, 3A and 4A is ideally suited for you. These numbers that I'm sharing with you, by the way, are all on a per contract basis. These are on a per contract basis. So if you traded 10 contracts, it's 10 times the number that I'm sharing with you. So let's take a quick look at oil. It's the same sequence. It is taking the 5-minute 3A, 4A, and just looking for 20 ticks of profit. That's $237. That's only 23 ticks. That's okay. 5-minute holding for the PFO exit is 62 ticks. That's half of what we'd be looking for on a daily basis. And then taking the 10-minute with holding for the PFO, taking 10-minute with the standard profit target of 20 ticks is just under $1,000. And then the 10-minute holding for the PFO exit is $1,770. And then the combined is standard of $1,195. That's 119 ticks. We're looking for 125 ticks on a daily basis. And then holding for the PFO is just under $2,400, so 240 ticks. So the numbers are really strong. And what I like to look at regarding 3A and 4A is that they are an enhanced opportunity to hold for the trend. They are enhanced opportunity to hold for the trend. The biggest opportunity in trading is to leverage the trends. If you want to take every trade and just lock in 20 ticks or lock in 10 points on NQ, that's fine. You can see what the numbers are here. So these numbers will continue to evolve for us, and we continue to evaluate them, much like we've done with everything else up to this point. One other thing that I just want to share with you here real quick is if you look at the number of trades, if you look at on NQ, the 5-minute and 10-minute PFO holding for the PFO exit versus what we've been evaluating that Kristen tracks, it's 13 trades versus 27, 13 versus 29. That was pretty similar on that day, 18 and 20. But you can see that the majority of the days we have far fewer trades with bigger profits than what we've seen so far today. Okay, so in order for you to be ready to trade this, you're going to want to set up alerts on your PFO indicator. And you're going to need to update your adaptive entry system. So you're going to need to follow these instructions. If you go to newcycletrading.com/system-update, there's a tutorial there on what you need to do in order to properly update your PFO so that you can set up alerts. This is what you're going to want to do. Aaron created this, so use this link here to download the most updated version of the adaptive entry system that has the updated PFO, and then be able to set up alerts on your PFO. Also, if you're brand new, you've never encountered the Aurora system before, or if you just haven't subscribed to the Aurora system, you haven't determined that it's right for you yet, with the release of the 3A and 4A, we are going to be talking about it extensively tomorrow in the live trading room, as well as all of next week. So feel free to register for 1 free week. There's no financial commitment from you in the live trading room, and you can join us next week to ask questions, learn a little bit more about how it works. Over the next 6 days, we are not going to be mostly calling out signals for PB3s, PB35s, and PB13s. We'll still make reference to them. Some of it might be in hindsight, where we'll go back and show you the structure of that and be able to recognize it. But our primary objective is to help you really reinforce your understanding of the 3A and 4A signals on both NQ and oil. So we're going to be flipping back and forth between NQ and oil, and we're going to help you identify the 3A and 4A signals. And if we are focused on seeing a PB 3 or 35 or PB13, we'll let you know what we see, but it's going to be a little bit different format for the next 6 days than what you've seen in the past. We're not calling out every single signal. We're there to teach you how to interpret the system, with 3A and 4A being our primary focus, but we want to now graduate each of you into understanding how to trade the system. So we're going to take questions now. You can also get more information at newcycletrading.com/Aurora. I'm going to back up one slide, and I'm going to leave it here while we take questions. And that way you can jot down those URLs if you need them. All right, Kay is asking, how many contracts based on this P&L? So the P&L that I was showing you, the performance results, was all based on one contract. Okay, one contract of oil, one contract of NQ. So everything that we present in our tracking is based on a single contract. That's the performance results of a single contract. And that's why I say I'm looking to scale up to 10 contracts, but that's me personally. That's with my team here. You may decide that you never want to move beyond a single contract, and you may decide that you want to trade, 2, 3, 4 contracts. You might decide you want to trade more than 10. That's really entirely up to you. Oops.
Hey, Mark.
Hey, Kristen.
I have a question from Michael S. He is asking, how long have 3A and 4A been tested, and can he assume that it works in any volatility, after hours, etc.?
So we first started developing, as you know, Michael, we first started developing Aurora back in August of 2020. Is that right? No, sorry, August of 2000. I'm kind of losing track of time here now. Yeah, 2020. And all of the signals that we will talk about within the Aurora trading system, including 3A and 4A, were part of that original design. It's just that we needed a place to start. We needed a place to start to teach this. And we actually, at that point in time when we rolled it out, had more data on the PB3, 35, and 13. And so that's what we started with while we continued to evaluate and research and track 3As and 4As. So we've got months and months of data, but then we formalized it. And I thought one of the best ways to really validate and test it was to formalize it with my team here, my prop team. And we've had them trading it live since the 21st of March. So the data you see here is not extensive, but we've got extensive amount of data behind the scenes on all that. Okay, Christian. Hey, good to see you here, Christian. So let's see here. How do you feel about trading NQ micros? Thinking about trading 5 micros and 1 mini contract, end up half your current results. Yes, you're right, but that's still excellent money. Lower reward, but lower risk. I can build up the account and handle the drawdowns. So first of all, I think that you're on the right track to modify, to take the Aurora trading system and modify it to what's going to work for you, Christian. And I think starting with micros is excellent. Every one of you, if you've never traded the Aurora system, should be starting in sim. And then the micros are a great way to graduate into live money. But yeah, I think that you're on the right track. The signals are still going to work. It's just a fraction, a proportionate amount of profit that you would get from the minis. But I think you're on the right track.
Mark Scott is commenting PFO used to require 2 in a row. Can you respond to that?
Yeah, that's not the requirement for a 3A and 4A. That was when we were using PFO as a primary entry signal. And now that we are pairing it with CXA, PFA, and the price bar color, that's not necessary.
I was waiting for Deborah's question. Deborah's asking, do you have a feeling for how the 3A and 4A perform on a 3-minute chart?
I don't have data tracked, Deborah, but my sense is that yes, it works just as well. In fact, today I was, preparing for tonight, and I was trading with my prop team, and they were looking at the 5 and 10 on NQ and 5, 10, and 15 on oil, and I took a few trades on the 3-minute because what that's doing. This is a really great question, Deborah, and gives me an opportunity to emphasize something. It's now less about this regimented, use the 5, use the 3A, use the 4A. And now it's more about, I understand the entirety of the system. And the system is going to provide the opportunity for me. So today I saw the 3A, sorry, it was a 4A on the 3-minute. And I also had what looked like a building coming in the next couple of minutes, a 3A and the 5-minute. So my interpretation from a system view was I've got strength building to take this trade. I took the trade, although the specific signal was off of the 3-minute using a 4A signal. It worked out perfectly. I had almost instant 10 points of profit. But you're going to hear me talk more and more. Kristen will be out next week. I'll be in the live trading room, and you're going to hear me talk a lot about think in terms of the system, the entirety of the system, and always know what your goal is, and let's work towards achieving your goal.
Mark, Bob is asking, do these new signals eliminate the need to use the Alligator moving averages and Bollinger bands to filter trades?
Oh, not at all. You still want to use those if you're trading a PB3 or PB35 or PB13, just like we've done before. But specifically a 3A or 4A signal, with rare exception, we're not really filtering anything. We're just taking the signal. The use of the combination of PFO and the other indicators is really providing a natural filtering of those other factors. But again, I'm not suggesting that you discontinue the other using the other signals, which has some filtering associated with them. I'm saying we now want to add to our system the 3A and 4A so that you have a broader view of what's going on.
Mark, can you confirm the recommendations that we're making for Bob for the profit and stop values?
Yeah, the stop values that we're starting with, Bob, on NQ are 30 points, and on oil is 50 ticks. That's the stop value. The profit targets, this is where you need to make a decision about whether or not you want to hold a trade for the trend. I shared with you the results of holding 5-minute trades for the trend versus 10-minute trades for the trend. And if you're going to hold for the trend, you're looking for the PFO to quit printing. That's when you're going to exit the trade.
Mark, Tony S. is asking, over the past couple of weeks, we've seen some high point value, 35 points or plus hop that I'm not sure what that is meaning, that had the full 3A or 4A alignment, often with opening in the center of the bar. Is this where filtering comes in?
I'm not really sure I follow your question, Tony.
Yeah.
You're talking about where you say it opens in the middle of the bar. You're talking about it didn't open at the open of the bar, it opened mid-bar. That's not filtering for us. Filtering is when we recognize a higher risk trade, like it's so far outside of the moving averages, or it's up against the Bollinger Bands. But in those cases, what you do is let's say there's a PB35 presented and it's at the Bollinger Bands. Well, you're going to filter that just like we've been doing in this heightened level of volatility. And then if the 5-minute prints a 4A, you're going to take that trade regardless of where the price is printing, because that's what we are seeing in our tracking, that once you have that full alignment, you ignore the filtering and you are able to follow some of those trends that walk along the Bollinger Bands. We've had several in the last few weeks that just continue to walk along the upper or lower Bollinger Band. Ed is asking what time frame. These are based on Eastern time, 7 to 2.
Mark Barquette is.
Let me just add to that.
Mm-hmm.
And eventually we'll have exactly the same format that we have with Kristen's tracking, where we can do some sorting and we can evaluate different time frames. But right now, it's just showing 7 to 2 because I've got my prop team focused on that. Their number one objective is to trade. Their number one objective is to trade, and they're recording on the tracking what they are taking in the way of trades and what their performance is in the way of trades. And then if they're done early for the day, then they record until 2 o'clock, whatever the bar open is, if they're not trading anymore.
Mark Barquette is asking for PFO trades where we have the potential for larger profits. Do we have data on max drawdowns?
Well, we do. Hold on. You can see what the max drawdowns were. The only data we have right here, just because the way the spreadsheet is configured, is what are the max drawdowns when we're trading the 5-minute, 10-minute, holding for the PFO exit. Here's the max drawdowns. That's the same format that we have for the tracker that we've been using.
Mark, do doubles happen a lot more in 3A, 4A? Do you ever take doubles?
Well, no, that's up to you. Right now, my instructions with the prop team are the only doubles we're actually taking are fractals. So if we're in a 3A or 4A signal, we'll also take a fractal. But if we're in a 3A that has not yet played out for us, and on the next bar a 4A comes on, we're not adding another contract for the 4A because we're already in the 3A.
Mark, Andrew is asking, is there a way to have a single alert that triggers when all 3 or 4 indicators are aligned?
I think he was set up. We're not ready to release it yet, Andrew. But we're not ready to release it. But we have in a working, we're very close, but Aaron's done some work on this, where it's going to identify 3A short, you can see that right there, 4A long, and it's automatically interpreting the alignment of the signals. But we're not ready to release it yet. It's a work in progress, and it'll be a couple of weeks probably at the most.
Mark Barquette is asking, when one trade is done, do you wait for a reset on all 3 indicators or just the PFO?
It might be a reset on the PFO or the PBA. Those are the 2 primary resets. But we're generally looking for some sort of a reset, a break in the print, a break in the alignment. And it's almost always going to be either the PBA or the PFO. Ed, if you're asking what a prop team is, so it's a proprietary trading team. Lots of big institutions have them, banks have them, and it's basically a team of traders who are trading the internal firm's money. So we've made a commitment to hiring some folks who are basically trading the system, but we're not trading other people's money with it. It's our own funds. So there's an advantage to that, a couple of advantages. First of all, they can do the work to help us trade, but also they're easily doing the tracking now for NQ, 3A, 4A, and oil. So as we add other markets, we'll be able to then start tracking and building a knowledge database in terms of parameters for other markets. But right now, we've got traders focused on NQ and oil. Eventually, we'll add somebody to trade options and then figure out what other futures markets that we want to trade.
Mark Ron is asking, will there be a PDF, like a job aid for 3A, 4A, similar to the ones for PB3, PB35, and PB13?
I'll let you answer that, Kristen.
We are working on that, yes.
Kristen's actually working on that, but the answer is yes. Tony, you asked, can you share performance of the prop team? This is the performance of the prop team that we shared. This is the performance, but if we stop, like today, we were done trading, we surpassed the goal that we had by 10:30, and then what they do is they are tracking the rest of the day. So there's a combination of what their performance is versus what the system offers in its entirety from 7 to 2. But our number one goal is having the prop team achieve their goal. That's what we want. Nothing else will distract them. So they're recording what they are actually achieving. And that's how we know when to quit trading.
Mark, Debbie is asking, for the 3A and the 4A, which signal comes first, second, or third, or will all signals come on simultaneously? So can you talk a little bit about, how those signals might build?
Oh, sometimes the 4A comes on first without a preceding 3A. It can actually build in in most any sequence. You know, here 3A comes on first, and then followed by a 4A. But here you have a 4A signal because you're already in a declining trend. Here you have a 4A signal that comes on, there's no preceding 3A. And then once you start getting more comfortable with seeing the entirety of the system, you're going to realize that you could have a PB35, which is one of the signals that Kristen's been identifying for you and teaching you. Take 10 points on that, followed by a 3A or 4A on the 5 minute or on the 10 minute.
Mark, Michael S. is wondering, are you adjusting option trades to use 3A, 4A?
Yes. It's actually been one of our challenges on the options trades is because the price is moving too quickly. I'm not quite sure how to feel about that, but the price is moving very quickly on those. But yes, 3A and 4A are good, strong options indicators for us. Let's see here. Yeah, so Tom G is asking, can we show another example of the signals on the chart along with the signal stopped? Absolutely. So I'm going to stay on the 5 minute chart on NQ, and I'm just going to scroll back. Where do I want to go here? I'm going to scroll back to yesterday. So right here, Tom, at 9:35 yesterday morning is an example of a 4A. There was no 3A leading into it, but here's a 4A. It's because the price bar color is red. We have a PBA, we have a PFO, and we have CXA, and they're all lined up. That is an example of a 4A entry. And that bar opened at 602 and a quarter. And the signal is no longer valid here at 1010 because the PFO went away. So if that happened at the open of the bar, I'm not looking at the alert log here, so I'm just giving you an example of how to interpret this. If that opened blank with no directional bias on the PFO at the open of the bar, you're out of the trade at 464 and a half. Trade opened at 602 and a quarter. Just one trade, it'd be done for the day. So it's about 140 points of opportunity. But along the way, you can see here how there's a progression of lower lows and lower highs. So on that very first bar, the price moved down 32 points. Okay. On the next bar, I would be putting my stop at the high of the prior bar. And on that bar, we moved down to 534 and a quarter. So remember, we started at 602. So 534, you got almost 80 points. So you got 78 points. I would definitely be arbitrarily locking in 50 or 60 points, right? Because that's what I want to do. We're below the Bollinger Bands. That's been a fairly sizable impulse move down of 60 points. And so I'm going to lock in something. So I might have gotten taken out there. But if I'm going to just purely hold for the PFO exit, which we rarely do, there's a combination of PFO is telling us to stay in the trade, but we want to use the prior bar to help us lock in, eliminate risk, lock in profit, or an impulse move like this where I'm just going to arbitrarily lock in something. If I just want to purely stay with a PFOX, it's 140 points. If I use the prior bar and continue to follow it down, I think we get stopped out at 32.75, which is 70 points, 70 points of profit.
Mark, I'm going to just really quick address, Edward is asking, can you show what the PFO alert update looks like? What I can say is the PFO alert actually isn't going to look any different. You just need to delete the one that you have and update it with the new version, and the indicator at the bottom will look exactly the same. And the only difference, Mark showing it right there, is it's just going to be easier to select from a drop down whether or not you want an alert to show a long, a short, or a signal stopped, whereas previously there were some different variables that you had to put in there. So we've just made it a lot simpler.
But your signal itself, the PFO, is going to still present exactly the way it looks here.
Correct.
All right, let's see here. A couple of other questions. Michael saying A3-4A, especially 4A, is designed to help us catch a trend. How does it compare to PB13? You want to use both. That'll be something that you'll have to take a look at. I mean, you can, there are normal Aurora tracking PB13. PB13 trades averages $1,180. And under the PFO exit, trading 5 and 10 minute charts, it's $2,600. So that's looking at it strictly from a this versus that. I think what you're going to find, Michael, is you're going to recognize that there's a PB13, and you're going to recognize that there is or is not reinforcement of that PB13 from perhaps a 3A or 4A. And you're going to look at the entirety of the system rather than walking down the hallway and opening a single door, and that single door is a 3A, or that single door is a PB13. And you can't see once you're in that PB13 room what's going on anywhere else. We want to take all the doors down, we want to take all the walls down, and I want you to stand in the middle of the room, the system, and I want you to look around and say, this is the best, most aligned opportunity for me right now. And it's very possible that many of you, with the goal that you would have, it's not at all out of the question that you could hit your goal with a single trade. 1, 2, 3 trades. It's just, I'm not saying that that's going to happen to you. I'm just saying that the way the system is viewed, you can achieve a pretty healthy profit, whatever your profit goal is, by looking at the entirety of the system. And in that case, it may mean that you decide to skip a few trades because you now have learned that there are other components that may make that a little bit questionable, less likely to work out. You can absolutely just trade with some focus on a strict set of, I'm going to take every PB3, every PB35, or I'm going to take every 3A and every 4A, if that's the way you want to trade, and you'll be successful with it. I'm saying take fewer trades, open up your view of the entirety of the system, and I think you're going to be pretty happy. We're going to try to help guide you through that.
So Mark, I'm going to try to summarize Sad's question here. He was just talking about, I believe, the tracker. and looking at the possibility of where you're setting parameters, maybe one trade resulting in $1,000 of loss. Can you talk about losses and how we can manage them to be less? And then a second part of that is just he's trying to do some math based on the number of trades that he saw in the first column and the totals. If the profit is $20, and I think this, I'm going to just try to address the second part of his question. I believe that there are times based on what you're seeing on the charts or based on the rules where you might not just get filled at the full profit. You might close the trade based on a factor which might result in, not having the exact amount, the exact profit that you'd be holding for. So that's probably why you're seeing the difference in the total there.
I think I think you're wasting your time trying to dig into that level of detail. I think you need to take the concept of the system and you need to trade it in sim and gain your own level of experience. If you find yourself spending that much time digging into the math and justifying that, 10 points of profit and using a 30-point stop, I can't win that way. I've had many people tell me that. It's just a very naive point of view in terms of trading. You don't really understand what you're looking at. Not you, Sad. I'm just saying in general, if people are challenging without trading, challenging without trying, challenging without doing their own validation and testing, then you're really not you're not the right person to be trading this. So Sad, I understand the question that you're asking, but I don't think that that's worth your time. I think you trade for a week, trade for 2 weeks in sim. It costs you nothing more than what you might be investing currently. If you don't have the system now, you can trade with us next week. Doesn't cost you anything, and you'll gain some experience with that. All right. Sad, yes. Yes, you may. This free trial offer in the live trading room is available for everyone, even if you've had a free trial in the live trading room before. And the reason we're doing that, which is an exception to our normal rule, is because we've added the 3A, 4A to the system. And we want you to understand if you weren't trading it before or it didn't seem like it fit into your trading tool set, then we want you to understand 3A and 4A and have an opportunity to evaluate that.
Mark, Greg is just asking if you're looking to hold for longer trends, what role does Cycle Finder Plus play in Aurora?
Cycle Finder Plus has always been a strong tool for me. Kind of proud of Cycle Finder Plus because signal that I spent months developing the settings on. But if you want to trade the entirety of the system, frankly, again, let me get into a reasonable time frame here, not an overnight or. There we go. Here's in my opinion, a very simple way to consider Cycle Finder Plus. The blue line is the lead line and the red line is the basis line. Anything above this horizontal red line is the sell zone, and anything below this green line is the buy zone. When Cycle Finder Plus originates in the sell zone and the blue line crosses below the red line, that could be a good indication that we're going to see some movement to the downside. When Cycle Finder Plus is in the buy zone and the blue line crosses above the red line, that can be an indication that we might have some movement to the upside. In this case, we had some minor movement to the upside and then it retreated back down and we bobbled around. Where I get a little cautious, one of my own personal filterings not 100% of the time. But where I get a little cautious is where Cycle Finder Plus is just kind of meandering around the middle of the range. I don't like that at all. I want to see Cycle Finder Plus originating from the sell zone or originating from the buy zone, and that gives me a good strong indication. And I'm not going to get into too much of this here in this session, but we'll be talking about it in the live trading room. One of the things that I will do is if I see a signal and I see some other conflicts and I'm trading a 5-minute chart, I'll pull out to a 30-minute chart and just take a quick view. What's Cycle Finder Plus telling me on a 30-minute chart? Back here, it's pretty obvious we were going to go higher. I didn't have the signal to do that yet, but it tells me that we're going to go higher. Here, it tells me we're going to go lower. And what we've done is we've just kind of paced sideways. So there is still potentially some sort of movement to the downside coming. So that's my view of Cycle Finder Plus. All right, that's fantastic, Christian. And thank you for being here. The training videos 1 through 6 are all available at no charge. So anybody can completely learn how to trade the system, understand the system before committing anything to it.
Mark, I believe this was listed on a slide, but just to confirm, Bob is asking, do you recommend still using fractals for stops for these new signals?
100%, absolutely. We always use fractals, and we trade fractals too. So the numbers that I've shared with you do not include fractals. So there's actually more upside. But yes, always adjust to a fractal unless it's too far away for your personal risk tolerance.
Montana Mike is just asking for confirmation for the PFO signals to be active. I think he means for us to get a signal. Does the color of the PFO need to be present, not just the direction of the PFO, but the actual color?
The only thing we consider in alignment, Montana, is that the color of the PFO is aligned with the other indicators as mentioned. But the cool thing about the PFO is you can kind of see when it might be coming, because here in this example, we had the PFO cross the 0 line. So now it's above the 0 line. We have a second gray bar that's building, and we might have more gray bars, we might reverse, but this is one of the first clues that we might have something happening where we'll get an alignment. So that's one of the things I like about the PFO is you can get a potential preview of what might be coming. Ed is asking, is there a reason not to stack the 3 indicators used together on the chart? You can organize your indicators in whatever order you want, Ed. You can stack them all right underneath each other. The way I have my chart configured is the way I like to view it, but TradingView gives you the complete flexibility to structure it the way you want. Greg, you're asking about this. That's not something we're going to talk about in this session. That's potentially something for a future session, but just another form of indicator that we are evaluating.
Mark, I'm not sure if you answered Ed's question. He's talking about, is there a reason not? Oh,
Yep,
okay.
Just talked about that.
Okay, great. Sorry.
Barkat, you're just going to have to experience it yourself. I right now don't have the breakdown in terms of timeframes like we do on our 3 signal tracker. What did that get out there? What is that? I swear I'm not doing anything. Bob says he just took 10 points of profit on a signal. Good for you, Bob.
That's great.
All right, folks, we're going to go ahead and close out the session. We're going to be talking about this in the live trading room tomorrow, and those of you who are signing up for the free week will join us next week. But thank you for being here, and look forward to working with all of you. Thank you, Kristen.